Thank you, everyone, for joining us. Thank you, Smallcap, for hosting and giving us a platform to talk about our company, Cannara. Cannara, traded on the TSX.V under the ticker LOVE, L-O-V-E, is a fully vertically integrated Canadian cannabis company. We're built out of Quebec, and we own and operate over 1.6 million square feet. So I'm going to go through our presentation a little bit about the company and why I think we are going to be one of the few Canadian successful cannabis companies here. Of course, general disclaimers, please visit our website, Cannara.ca, for our investor deck and read our general disclosures on forward-looking information. I'd like to introduce myself firstly. My name is Nick Sozak, CPA. I'm the CFO of Cannara Biotech. I've been with the company since 2019. And why I chose cannabis is because I'm really, really deeply passionate about cannabis. Did my CPA training, worked at Dundee Corporation in real estate, but always had a passion for cannabis. When it legalized, fully invested my life funds into cannabis, into competitors, and seeing it grow, and quickly realized that they had no idea where the industry was going to go. And I knew that I wanted to make a mark in Canadian cannabis, join a company that I had ability to grow into and make my mark. So I joined Cannara in 2019, and not only do I do finance, accounting, IR stuff, but I touch sales, marketing. I've created every single product in the company. I phenohunt all the genetics. I'm very, very passionate about the plant, the product, and what we do here at Cannara. But not only is it just me, Zohar Krivorot can't be here with me today, but he's our CEO, founder. It's rare that there's still like the original team in Canadian cannabis, in a cannabis company that's still surviving, but we're not going anywhere. He's built the company in 2018. He owns 25% of the company through another, one of our directors owns another 20-something%. So we're over between both of them, they own 50% of the company. But what's magical about this CEO is that he doesn't smoke cannabis, never grew cannabis in his life, but quickly realized what was going wrong with the industry. Money couldn't buy happiness in our case, in the Canadian cannabis. No amount of money would have turned on a facility and made it execute properly, because no one knew how to grow cannabis. There was no consultant out there that you could call and write a check that could cultivate and grow cannabis and be able to give you all the instructions and guidelines to be able to sell that cannabis and make money. So Zohar realized that early on, and being a non-cannabis smoker today is our master grower today. So he's in the facility every single day, knows every single protocol, has built every single protocol in our facility, and is the reason why we're always tweaking and improving in our gross margins and improving in the way we do our things. And I'm a CFO, so I get to cost the product, but I also make the product. So between me and him, I think we have probably the most hands-on experience in Canadian cannabis, and that is why we have a very strong execution team, and we're going to continue to execute to become number one here in cannabis. So who is Cannara? As I said before, we're vertically integrated, licensed producer of premium grade cannabis. We're actually the 7th largest in sales. So it's been, since 2021 we've been operating. We were based in Quebec. So we first started selling into Quebec. We are the 2nd largest player in Quebec with a 12.8% market share as of today, basically 130 basis points away from being number 1 in Quebec. But zooming outside of Quebec, slowly every quarter, we've been making our mark outside of Quebec and have become 7th largest LP by sales nationally and continuing quarter over quarter. We're also the 4th largest producer based on square footage and largest producer in Quebec. Again, I said at the beginning of the presentation, and we're going to visit our facilities in a bit, but I have 1.6 million square feet of cannabis grow facilities, purpose-built cannabis grow facilities. Those assets can produce, when fully operated, 100,000 kilograms. That is a lot of weed. That's 100 million grams of weed. Today, we're producing, and going into 2026, selling 50,000 kilograms of weed. So exactly 50% of our target when we're fully built out. We're exactly at the 50% mark. It took us 4 years to get here, and it's going to take us another 4 years to get to fully utilize. It's a simple business to understand. You have management, you have executive hands-on, knows the products, know how to grow. We've invested in our grow, we own the assets, and now all we have to do is basically redo what we've done for the past 4 years in our existing 12 rooms and recopy that into the next 12 rooms and sell that weed to Canada. So that's exactly what we're going to do, and one of the biggest milestones going into 2026 is SQDC, one of our biggest market. We have 50% share. 50% of our revenue comes from SQDC, has recently announced in November that they will be opening a whole new category, the vape category. And this represents usually about 20% of a provincial sales category, right? So in Ontario, vapes have been, I think since 2022, it's been legal to sell vapes all across Canada. Quebec, starting November 2025, first time that's ever gonna be able to sell vapes. So that's a huge catalyst. Us being number 2 in that, with why we're number 2 is because of our value proposition. We execute high quality product and we price them extremely well. So with that value proposition being number 2, our products are brands, we are going to carve out a large portion of that vape category. We're confident. We've spent countless of hours, myself, the CEO, on innovating the vapes to be ready for this opportunity. But then going forward, we're going to scale and continue scaling into the rest of the provinces here in Canada. A little about profitability, because that's what sets us apart. It's our financials. We're really showing execution. It's not hopes and dreams. You can look at the past quarters, the past years that we've printed, and see concrete results that we're actually performing. Our latest quarter, which ended May 31st, 2025, we posted $80 million of net revenue. That's after giving 30% to the government. But that's 9 months of revenue. I'm just $2 million shy of where I was last year for the 12 months at $82.2 million. For gross profit, I've already beat my target for 2024 at $32.7 million of gross profit on that $80 million. That represents a 41% gross margin for my 9 months, but you can see that every quarter we're improving our gross margin. Fiscal 2023, 37. Fiscal 2024, I went down to 34. The reason why is because we were innovating. We were trying different cultivation techniques, trying to figure out how to improve the yield that we were doing. In addition, finding different genetics improves your yield significantly. Genetics is the key to success in cannabis. There's not one agricultural farmer out there that has to figure out how to change the product that he's growing, the genetic that he's growing, every 6 months to cater to the need of the market. And that's what we're doing here. And every time that we find that new genetic, well, we're also checking off the box, does it yield more? Does it produce more? And if it yields more and produces more, well, that means I have the same amount of cost over more material to sell, my gross margins improve. So that's what we're seeing here. Adjusted EBITDA at $20.7 million in my 9 months, already beating my fiscal 12 months in 2024. That's a 26% EBITDA margin and a net income of $9.8 million with an operating cash flow of $17.2 million for the 9 months. And you can see that since last year, 2023, 5.9, 10.7, 7.2. I always say this, we look at every quarter, it's a rearview mirror for us. Why is because we're launching products that have a great value proposition, that stand the test of time, and we're able to layer our products and innovation and capture market share quarter over quarter without the cost of losing market share in other markets. Cash on hand for the Q3 2025, which is May 31st, is $14.4 million. Working capital of $49.4 million working capital. So that's great increases from where we were in 2024. And our basic shares outstanding is 91.4 million. That gives us an estimated market capitalization as the last close of September 26th of 156 million. That's a closing share price of $1.71. And our average daily shares is about 90,000 shares traded. As I said at the beginning of this presentation, Zohar who's our CEO and founder, plus a member of our board who helped cash flow and provide equity into the company, own more than 50% of the company. In addition to our top 10 shareholders, which are family offices, if you combine everyone, 70% of the float is tightly held with supportive, communicative investors that want to see the long-term results of Cannara being a successful Canadian cannabis company. A bit of our financial milestones. We're always improving. Not only are we improving from an operational standpoint, but we're always trying to improve our financial standpoint, our metrics, our balance sheets, our margins. But if we're looking on the balance sheet, we're backed by BMO. They financed one of our acquisitions of the facility, the Valleyfield facility, which I'll get into in a bit. But BMO is a great partner for us, and we basically successfully just recently raised another $10 million, or increased our term loan for another $10 million. That will help us expand the next project that we have for Valleyfield, which I'll explain in a bit. In addition, with the reduce of the Bank of Canada rates, us being having very good financial metrics, we have a very low interest rate, below 6%. On top of that, we recently sold a building that was part of our site that we acquired back in 2022. We sold it for $5.5 million, and that went straight to repay our debt. So any cash flow that the company's generating, we have two options, and that's our focus. One is going to go to capital investments to continue increasing the expansion of the Valleyfield project and getting us from the 50 million grams sold to the 100 million grams sold, but also reducing our debt. Right now we have $28.5 million of debt with BMO. That's in a term loan. We have a $6 million line of credit and this new $10 million credit for the construction. Here's a slide on our market share. As I explained before, 12.8% market share in Quebec. That puts us ranked 2 in Quebec, 130 basis points away from becoming number 1. So with the vape launch coming in November, we're gunning very strongly for that number 1 position going into next year. In the rest of the provinces, healthy growth, 22% increase since last year in Ontario from 2.3 to 2.8. 39% in Alberta, 1.8 to 2.5. BC, 1.4 to 1.8. Saskatchewan, we decreased because we changed supplier distributor last year, and it takes a while to get back into the revenues. But our real main markets that generate 98% of our revenue is Quebec, Ontario, Alberta, and BC. And in all those provinces, we've gained market share, and we continue to forecast to gain market share. We have 3 brands, Tribal, Nugs, and Orchid, and they have all of them top performing products. We're number 1 in Quebec for infused pre-rolls under the Nugs brand. We're number 1 for our CBD flower in Canada for our Orchid brand. We're number 1 premium live resin vapes under Tribal, number 1 hash rosin under Nugs, and number 1 mass premium 3.5 gram per flower. And it's these brands that have these brands and these sales metrics that have gained our 41% year over year retail sales growth, marking us the highest growing LP since last year, delivering 5 times more than the national average in growth. So we also recently, just in August 2025, which is our year end, achieved our highest monthly retail sales of $28.8 million. So every month that goes by, like I said before, rear view mirror, and we're just continuing laying the foundation and improving quarter over quarter the sales. 7th largest LP as of today. This is what we're up against. Our growth is not going to be through the single digit gains of the Canadian cannabis industry. Yes, the vape is going to help us a lot. But for our strategy, we're relying on what we built, the assets we built, the value proposition we built, the product and the price. And that's what's going to continue to escalate us and gain market share. Ultimately relying on what we've been building from day one, which is the quality of our cultivation asset. And that's the most important thing. We continue investing in that cultivation asset to improve quality, improve yield, improve product, continuously innovating so that we can continue growing market share quarter over quarter and reach our plan of doubling from where we are today. 100,000 kilograms, which represents $300 million of revenue. Tribal, Nugs, and Orchid. Those are our three brands today. That's what's generating over that $100 million. Take out Orchid, that's about 2% of my revenue. 98% of my revenue comes from two brands that we've created from the bottom up. So we still have other opportunities to scale by creating new brands and opportunities to enter, but we don't even see that need for the coming years. Tribal and Nugs, Tribal is focused on genetics, finding genetics, discovering the world of genetics, which is extremely long process to figure out. It takes us about a year to find a new genetic, test it, market test it, and get it into the market. And you have to have done all that work and make sure that it's going to resonate with your clients a year later. So Tribal focuses on that, finds new genetics. We have a roster of 7 genetics today, going to go up to 24, 30 genetics in the future. And we release them under very consistent product formats. We have pre-rolls, we have 3.5, we have vapes, we have infused pre-rolls, we have live resin concentrates. Under Nugs, that's where we get more playful and we can explore different categories and find other genetics that can fit into different categories. We play in hash, we play in edibles, we play in big packs of cannabis, multi-packs of pre-rolls. So that again represents 98% of my revenue, those two brands. And then we have Orchid CBD, who focuses on the wellness side, the CBD type of genetics. Although there's still a market category for CBD, it's just not as dominant as THC. So that's why we've been focusing our grow, our pheno hunts, and the product creation development on Tribal and Nugs. But as we scale, we're going to enter the wellness category with Orchid CBD. And what makes us be able to do all that is these 2 mega facilities built in Quebec. So the first facility, I'm just going to go to this one here, which is the first facility what started Cannara. This, we bought it for $12 million. It's 625,000 square feet. We invested $40 million, which was the go public money, to build out 170,000 square feet of cannabis, dedicated cannabis cultivation. This is where Zohar learned to grow, at this facility. And you can imagine somebody that's dedicated and really wants to know how to grow. In a year, he did 52 harvests. That's a lifetime of any master grower in any black market world to have grown 52 harvests in 1 year. So he scaled, his learning curve went from 0 to 60 very fast in that whole year. And this is where we learned our cultivation techniques, developed our SOPs, and really built the infrastructure for Cannara. Today, this stands more of a packaging center because we've scaled cultivation so much at Valleyfield. We're relying on Farnham to do packaging and shipping out our final product. But going back to our mega facility, this is what changed Cannara. This was in 2022. Changed, like we had this facility, and by the way, 200,000 is our cultivation, and 450,000 is leased out to long-term tenants. We generate about $4 million of annual revenue, rental revenue from this asset, which goes to help fund the operational asset. But going to Valleyfield, this is what completely changed Cannara on the map. Valleyfield, we acquired it back in 2021 for $27 million. This was built by the Green Organic Dutchman, who built it over for $250 million. So we bought that facility back in 2021. We were the lucky winners of it. And this is a state-of-the-art, purpose-built cannabis facilities, Ferrari of cannabis facilities. And what's really, really important is that any greenhouse, if it's open, you cannot control the way you grow. You cannot control all the different genetics that you have and ensure that you have quality across all your genetics. So what's special about this facility is it's separated into the 24 zones of 25,000 square feet. And today, the whole left side of our facility, the 12 zones on our left side, are what's activated. And in the next 3 to 4 years, we're going to be turning on the right side, the next 12 rooms on the right side. And this facility, currently generating 50 million grams, is going to be able to scale us to 100 million grams of purpose-built, premium quality cannabis. For 2026, we're actually building out the processing center, which is found right here. That processing center, as we scale the amount of cannabis that we're producing, we need to actually, we have to have an area to post-process it. Because we rely on premium quality, that means that we hang dry our cannabis, we hand trim our cannabis, and we bulk package it in 2-kilogram bags. So you can imagine 50,000 kilograms in 2-kilogram bags. It's a lot of work. So what you need is a lot of space as well. So we're investing $10 million, the BMO loan that we just raised, into the processing center, and that's going to set us up for the next 12 rooms, growing into the next 12 rooms in the east side of the facility. Little plan on how we're going to scale. So we've seen where we are 2025, 2026, we're investing into our processing building, and we're also going to invest in 3 rooms, have them ready so that we can be able to turn on, go from in 2027 to 15 to 19, and then to achieve our goal of having 24 active rooms by the end of fiscal 2029. In terms of sales, I just wanted to show you quarter over quarter the consistency of our growth in terms of revenue, gross profit, and gross margin. Saying that we're not a one-stop fly shop. We're not, promising that we have to go international or go there, or do these magical things to increase revenues and gross margins. All we have to do is continue executing what we've built today with our assets, with our team. We're 500, close to 600 employees strong today, and we're going to continue growing quarter over quarter to achieve that target of $300 million. Why Quebec? And that's, again, another, on top of our story, the assets, the people, the hands-on experience. We're built in Quebec. Quebec has the access to the lowest cost electricity and one of the cheapest labor in the country. What that gives us, it represents 70% of our cost to grow. And what that helps is that it basically makes it very cheap for us to grow, allows us to invest in the extras, like hand trimming, which costs me 20 cents a gram more than machine trimming at 4 cents. So it allows us to invest in our product and really give a strong value proposition. So in Quebec, we pay 5.9 cents a kilowatt versus Alberta at 14.1 cents a kilowatt. Quebec also has the highest barriers of entry. We have, in the Quebec market, the lowest amount of brands and the lowest amount of producers, which makes it less competitive and more solid for us to operate. And I guess in summary, I think Cannara is a well-capitalized, fast-growing business. We've shown and proven a history of execution, relentless execution. We have great products, high-value products. We actually own our assets, and we probably have the best capital investment profile in the industry. It cost me $1.5 million to turn on a room, and that room will generate $10 to $12 million in the first year of operation at a 45% gross margin. So the return on capital is less than a year. We have a strong management team and the most hands-on executive team and a very strong board of directors. We've shown consistent operating margins, strong EBITDA margins, net income, cash flow, free cash flow. We have the assets in Quebec, lowest cost of electricity, lowest cost of labor, and we have 3 flagship brands that have stood the test of time and have proven that there is brand loyalty in Canadian cannabis. And this is why we're positioned for national success. And in the next 3-4 years, we will scale this business and become #1 here in Canada. Thank you for your time, and I'll open the floor for any questions.